Hi everyone, it's Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, we feature particular stocks. So the stocks that you see on your screen now will be the ones featured in this recording. And as a reminder, if there's a particular stock you're interested in, you can go directly to it using the chapters feature in the recording. All right, so let's take a look at the market. I think everybody is aware the market had a big move to the upside today, this week, based on some economic news that came out during the week. First of all, we had the CPI report, and you would expect that the CPI report, at least the headline number, would have calmed down a little bit because we all know that gas prices have come down, so energy has come down. But the core CPI is ex-food and energy, and that was fairly tame as well. Then we had Chairman Powell come out with the Fed meeting on Wednesday, and no surprise, there wasn't any sort of a move made. Nobody expected that, but right now is what does he say on behalf of the Federal Reserve? And he talked about their favorite indicator. We've kind of joked about that before. They can't look at the CPI, PPI. They have to have their own, which is the PCE deflator. And they said that they expected that to show a reading of 2.4% next year, down to 2.2% in 2025, and then their target level in 2026 of 2%. Well, they've been saying they want to get inflation down to 2%. Now, a lot of people have doubted if they can actually really get it that far down, but that's what they said. But anyway, general terms, the market viewed that as a fairly dovish report from the Fed governor. We still have 100 basis points of rate cuts priced in next year. They did kind of mention the aspect of maybe rate cuts around summer of next year, and I felt like that we won't see any rate cuts before summer of next year. But the fact that that was even talked about by Fed governors, not Chairman Powell, but other Fed governors, has all added ammunition to this break in the market. So if we go back and look at the chart of the S&P, there's the key move, above 460. We've been talking about this for a while, and he said if we could break 460 with follow-through, which is exactly what happened. We broke above the 460 level here. We had follow-through. We got a little bit overbought yesterday, so a little pullback today is warranted. Still a little separation from the 10-day moving average. As we've noted, we now have a 5-wave LA wave pattern labeled on the SPY in the wave 3. So this move to the upside here, breaking above 460 is key. Likely that we're going to see some sort of a continued move higher into the end of the year. The LA Wave algorithm, as the software is programmed, if you've been with us before, you know. If you're new, this software is called Profit Source from the Hub organization, hubb.com. You can reach out to the folks there. Go to support@hub.com, find out more about it. They just released their live version. It's in beta testing now. We can't wait for that live LA Wave charts. Going to be amazing. In fact, we had a great conversation on cryptos over on the Hub Financial channel earlier today. We do a live show on the Hub Financial channel on every Friday at 2 p.m. Eastern time. So if you're watching this and you haven't done it, go over there and become a subscriber there, and you'll be notified every time we do one of those live shows. So taking a look at this move here, the LA Wave algorithm and this program, as I was starting to say, is programmed exactly to the algorithm, exactly as Ralph Nelson Elliott wrote it. For whatever reason, likes this number now at 490. Now, we could run to 490 first, or we could correct first and then run to 490. Again, if you're new, this 4 and 5 doesn't mean that we're within the wave 4 now with a wave 5 to come. This is all based on the current wave, which is the labeled wave, which is a wave 3. So we're currently in a wave 3, and it's saying if we were to correct now, if we were to start the wave 4, that's where you could find support, followed by the expected wave 5. But when you're in a wave 3, it can run to that particular target as well. So it's just a target that the algorithm likes, and it doesn't really give us an exact time frame of when we're going to get there. So again, pretty constructive movement to the upside here on the SPY, and we'll see if next week we soften a little bit in the beginning before drifting back to the upside. Looking at the 10-year, if you're looking for where's the catalyst other than the inflationary data, there you go. Look at what's gone on with interest rates. Just basically kind of fallen off a cliff here. And when Powell came out and other Fed governors kind of hinting, now Powell again didn't say anything about rate cuts. He said, we're not thinking about them. Other Fed governors have said we're not thinking about them. Others have said we're not talking about it till the summer. So they're kind of hinting that, all right, they're starting to sprinkle in when we kind of look to cut rates. But all of that is bringing the bond market down, especially on the 10-year, and that's helping the Qs, tech stocks, etc. We are at a 65% corrective move here, so we're moving past that 61.8% level, but not enough to where you say all's clear, this LA wave pattern is going to become disqualified. We're still in an area where we could catch ourselves. It's hard to imagine what the catalyst would be now for the rates to turn and move back to the upside, but you can't discount it just yet. But rates moving lower certainly have added fuel and ammunition to this rally. And we talked about that extensively in last Tuesday night's TradeFinder. And we do that every Tuesday night. If you haven't registered for TradeFinder, you can see the link on your screen now. Again, we do it every Tuesday night at 9 p.m. Eastern time. We talk about the markets. We look for trade ideas. And we have a live Q&A. We have a great community of people. They interact. You can chat with each other and they ask questions. It's a great time, and it's free. So sign up for TradeFinder and join us this coming Tuesday if you're interested in the markets at all. All right, now the dollar is one that's going to give me a little bit of pause here because I have no idea what's going on. Why is the dollar dropping like that? Of course, the thought of rate cuts, it could affect the dollar a little bit to the downside, but you would still think that it would hold in a little bit better than this. So these big moves lower are indicating potentially two things. Potentially the recession, which everybody is saying there's not going to be any recession. Jim Cramer came out and said there's going to be no recession. So, there is going to be a recession. Maybe it's mild. Maybe it's more severe. But for the Federal Reserve to start cutting rates, I think it has to be a decent recession. The bond market is still forecasting it. I never ignore what the bond market said. I learned that a long time ago in trading. And so when you see the dollar going down, the other side of the coin is if we're going to have a global recession, why wouldn't money be running into the dollar as the currency of last resort, which is what normally happens? So perhaps it is a mild recession and the rate cuts start to affect the dollar to the downside. Maybe that's what it is. I don't think we have enough information to figure that out yet. It's just confounding to me that the dollar has dropped this far. You can see a 77% correction in the dollar basically means that pattern has been disqualified. So the five-wave pattern is, we are at the last bastion of support at 78.6. So there is a potential of it to hold, but it seems like with the volatility and the downside moves of these being so vertical, hard to imagine that Elliott wave pattern is going to come into play. So perhaps the economy does skate through mild recession. Fed starts to cut rates, and everything is the Goldilocks scenario. I'm a little skeptical of that based on what the bond market is showing. The bond market is flashing warning, 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 Will Robinson. But everything else is saying that, hey, this might be okay. We're just going to have to wait and see how it plays out. When you look at the VIX just keeps giving us exactly what we need for a continued move higher. You get a little intraday bounce in the VIX, and then the market rallies, and we move back down. So we have broken below 13, but not significantly so. And as we've talked about numerous times, we've had the VIX down around 10 or 9 before, so we can go lower on the VIX without much of a problem. And it wouldn't be surprising this time of the year where things are low volume, low volatility. We're underneath it. So now that 13 level is resistance. We bounced off of it numerous times where 13 was support, and we had all these big bounces in volatility. Well, now we've broken below it and we're testing it. So it's clearly resistance, and we could move a little bit lower. But if you watch the VIX intraday, again, that's exactly what you would want for the market to move higher. You get intraday spikes and then it sells back off to the downside. All right, so let's take a look at Bitcoin. Bitcoin has gone through a bit of consolidation. So you've seen some numbers that might have worried you after this run to the upside. Also, something that we talked about over on the Hub Financial channel. We had a great crypto conversation there. So if you're into crypto, you definitely want to go register over on the Hub Financial channel on YouTube here, and we'll chat about that each and every week because the host, Brandon, is a very good crypto trader. So then we take a look here, and you can see that we're going through another consolidation here in Bitcoin. The last one that we had was a little different kind of consolidation, more of a pennant pattern, where you look like an old baseball pennant in this formation here. And then we broke to the upside out of that consolidation, and now we're in a symmetrical triangle pattern. And if you're a believer in the halving next year, then you would think that this could break to the upside. I just want to make sure, caution everybody that when you have a triangle, it can break either direction. So we'll see which way we break out of Bitcoin from here. But as Bitcoin is going through this, we got to go look at Coinbase. We've talked about that. We've kind of married the two because everybody asks about Coinbase that asks about Bitcoin now. And you can see we had a little bit of, look at that small triangle. Now, Elliott said, don't diss the small triangles. You got to pay attention to those too. They matter as well. And here it is. There's one of those small triangles here. And we had the break to the upside out of it on Coinbase. And is that a preceder of what's going to happen with Bitcoin? It's interesting that Coinbase is broken out before Bitcoin, because my commentary in the past has been if Bitcoin breaks out, it's going to drag Coinbase with it. Well, could it be the other way around? Anyway, being a little facetious there, but it's no doubt a nice breakout to the upside on Coinbase, and it continues to move higher. I would like to take a look at the DMI when you see something like that. And the only negative here is that ADX is awfully high. Now, you can get a scenario with the ADX. Normally, it moves kind of vertically, where it's moving vertically up or down. But every now and then, you get a horizontal move in a strong area, a strength area. And that's where we are now, which means that this move isn't getting any stronger than it's been, but it's still on solid strength. Now, if the ADX does roll over, which it hasn't yet, then you start to wonder, okay, what time do I want to maybe take some short-term gains? The indicator for when you want to take profits on the ADX is when it breaks down back below 40. So once we've broken above 40, we know the strongest part of the move is over. It can stay fairly strong for a while, but if that ADX breaks back below 40, that's when you get out. That's when you take your gains. But solid move nonetheless. And what this is telling us on the ADX is that was a fairly strong breakout of the triangle. So that's the long-winded answer to what we're talking about there. Now, something that hasn't been doing so well is oil. And this is what I mentioned in the beginning when we talked about the CPI number, the fact that energy has not been performing. Now, I made some comments today for our alert subscribers at evotrader.com that I feel like there could be a setup for a rotation here. Energy has been drastically underperforming, as evidenced by this chart on the USO. But at some point in time, money is going to rotate. Money is going to start to look for where are the underperforming sectors, where can we go? You saw that with the UE path chart, PATH, that we looked at last week and the week before, and we looked at that during TradeFinder as well, because that's in the AI space. So where are the AI stocks that have underperformed, not performed like NVDA, et cetera? And so the same kind of thing is going to happen, I think, with this rally. If this rally continues into the end of the year, which it looks like at this point that it's going to, money is going to try to find where can I make some quick movement, because the only traders that are left, all the traders that hit their benchmark are done. They've closed out their books and they're on holiday. The ones that are trading now are chasing. They're the ones that are trying to hit their targets. And the way they can do that is to find where's the underperforming stocks, where's the underperforming sectors. Energy's been underperforming. So perhaps we get some sort of a bid going into the end of the year here on energy. Now, it's a double-edged sword, right? If we start to see energy, or specifically oil, start to move back to the upside, how's that going to affect next month's CPI and PPI numbers. Is that going to put a little bit more of a type of a move into the Fed? We'll have to wait and see. But I do think if you are looking for a place, we're going to try to make some money moving into the end of the year. Energy makes sense. Now, it's all risk reward. But look, we're sitting on a support area here on USO, and it has underperformed. So it's got a lot of things going for. Look at some of our other markets here. We take a look at the IWM, and my goodness, that moved to the upside just when it wasn't that long ago. We thought it was a whole Katie bar the door thing, as you've heard me say, where 165 it had to hold, which it did. Now we're back up at 200 and testing resistance. So just when we were about to break support and all hell break loose to the downside, now we're back up at resistance. We gapped up there, you can see on Thursday. So can it hold this level without backing and filling a little bit? I would be surprised. You can see that the 10-day moving average is all the way down at 190. So I would expect some backing and filling. If you're long the IWM and you want this to go higher, a lot of people view the IWM as a risk-on, risk-off type of an indicator. If you want the IWM to go higher, you don't want it to go right now. You'd like to see it go sideways, consolidate under this 200 level, maybe even come back and fill this gap. At least let the 10-day moving average catch up, then take off. That's the ideal scenario that you want on the IWM. Looking at the Qs, now this is pretty impressive. And it also coincides, I think, with the interest rates coming down. But when you see a movement like that, that's institutional buying. So when you have the climb up in a 45-degree angle and they're not big, huge, volatile days, that's usually an indication of accumulation, meaning that institutions are buying. So institutions are buying into this fact that rates are going to stay down, which could be bullish for tech stocks and the Qs. And it also has labeled into a wave 3. So up around 420 is where the Elliott wave algorithm likes to take a shot on the Qs. So I think that we continue higher. If we look at the 10-day moving average, you can see not so overbought like we were on the IWM. So this is really impressive, the movement in the Qs, and I think you can feel pretty comfortable, at least for now, on being long these stocks based on that kind of movement. Now, taking a look at some of the other stocks of interest, Amazon, I think this chart is very reflective of the fact that we haven't heard a whole lot from Amazon. They haven't really told us, how things were over Black Friday, Small Business Saturday, and Cyber Monday. They haven't given us a whole lot of data on that. And so the stock's just kind of saying, let's wait until they give us some real information. A little surprising that we haven't heard more, little things here and there, but we haven't heard more of significant announcements on what occurred over that weekend. And kind of conspiracy theory makes you wonder, was it not that good? But right now we're just consolidating under 150. And this long extended consolidation, which has gone on for over a month, 6 weeks, if we do break above 150, because shorts are starting to build their line in the sand here. If we do break above 150, then we could get a significant break higher in Amazon. So that's what you want to watch. Amazon breaking above 150 with follow through, we could be off and running, but it's got to do it first. Because with this resistance, it could roll over and head lower. But for now, we'll see how it handles that 150 level. Costco, on the other hand, look at that. On their earnings report, exploded to the upside. And we had alerts for our alert subscribers. And we got out before the earnings report because, the stock had made a nice run ahead of time. So you look back, Monday morning quarterback and hindsight's 2020, all that stuff. Gosh, would have liked to have taken advantage of that move today, but hey, that's the way it goes. You never get upset with a nice bullish trade, which is what we had. And so now we're starting to look, and Costco is understandably overbought now. You can see the 10-day moving average is way down around 620. So that move is a bit vertical. We're a bit overbought. I don't think you want to chase this move right here on Costco. Let it come back. Let's see if it backs and fills a little bit. At least let's that 10-day moving average catch up, and then perhaps we can look forward. But I would be more inclined to, with Costco reporting those numbers, take a wild shot on Amazon that hasn't broken to the upside yet. I think that makes a whole lot more sense. Tesla, we looked at Tesla over on the Hub Financial channel today. Somebody asked about it in our live call-in show. And I think this one's a fairly easy one to talk about. You know, we went back, we had this big symmetrical triangle here, and based on Elliott wave patterns, corrective patterns are part of Elliott wave. You expect the breakout to be the same as the width of the triangle, which it did. So we had the breakdown to 200, which also happened to be a round number, the old Star Trek tractor beam effect. And then once you break out of a triangle, the expected move is that you go back to the point of the triangle. You retrace that move. And that's what we're doing right now. So you can see that there is support here around 240, where we went sideways for a while. So the chart of Tesla is pretty easy. It's likely that we're going to test 260 because that was the breakout point of the triangle. If we can break above 260, then I think we have a fairly fast move up to the next area of resistance, which is 300. So if you're long Tesla, what you're rooting for is a break above 260 with follow through. You get that? I think you get a nice run. Now, if 260 acts as resistance and we roll over, well, you have a little bit of support here at 240, and that could hold. If 240 doesn't hold, well, then we're coming down to this these lows down here around 200. So that gives you the levels. A break to the upside above 260 with follow through, we're going to 300. If we can't break above that, we probably come back and test 240. If that doesn't hold, then 200. So very defined levels there that you can take a look at on Tesla. Looking at NVIDIA. Now, NVIDIA had a little bit of a pullback, but again, that's normal. Now, it looks like we have a pretty well-formed zigzag pattern here on NVIDIA right at this point. You can see we're not currently in a 5-wave pattern, but all 5-wave patterns start with zigzags. I don't know if you knew that or not, but there we have a perfect 50% correction on this impulse move that started in the beginning of November. That gives us a target up around 563. We are at 38.2. Honestly, we need to break above that. And if you really want to feel comfortable in a zigzag pattern, you want to see it break above that A-wave high. So maybe if you're looking at NVIDIA, you kind of wait a little bit, let it get above that 500 level because you still have plenty of room up to 560. But it does look like we have a zigzag pattern setting up on NVIDIA at this point in time. Looking at gold, my goodness, we had that one day and we nailed that on the exit for our ewotrader.com subscribers. And we got out on that because it looked too vertical. Didn't look like it was going to have the follow through. It didn't. But on the positive side, on gold, we did hold 185 on the pullback. So we pulled back here. We held 185. Now it looks like we want to try and break above that 190 level again. Got turned back a little bit, as you can see today. But nonetheless, we held 185. So maybe we consolidate here a little bit again. And if we can break above 190 with a follow-through day, then we probably see 200 in a not very long period of time from there, not too distant future. But it's got to get above 195 with follow-through, and we're constructively bullish on GLD and gold unless we break below 185. We break below 185 with follow-through, then the whole thesis changes. But right now, we're constructively bullish, looking for a break above 190 with follow-through. And then we got to finish things off with, my goodness, look at this chart of India, relabeled into a wave 3. We talked about before, go back and look at some of the previous recordings, how you couldn't script a better Elliott wave Fibonacci chart than the performance of what the INDA has done. It's done everything exactly as you would expect. And now we have this big vertical break on the wave 3. And that's the only negative of this is the fact that we're a little bit overbought and we've had a little bit of a vertical move from this consolidation. But look what happened last time here. So it's hard to argue with this. So consolidated here sideways, big move up. Consolidated, big move up. Years ago, we used to call that a stair-step pattern because you could see the sideways consolidation, then you get the vertical move, and then you get another sideways consolidation. and then you get from that another breakout move, and you can see it kind of looks like stairs moving to the upside, hence the old stair step kind of connotation here. That's what it looks like. I'm a little bit nervous about all those vertical moves, but it's been awfully impressive. I think that you'd probably want to be a little cautious here on the INDA because of the vertical nature of these moves. If you've been part of it, great, tighten your stops. But then if you look into the future, into the first quarter of next year, the Elliott wave algorithm does like getting above 51. So it doesn't look like the end of the move is over. But perhaps with this vertical stuff, maybe we need to rest, go sideways for a little bit, just as we did at the end of the summer. All right, so that's it. Thanks, everybody, for watching. As always, have a great weekend. Look forward to talking again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.